Hey guys, good afternoon, everybody. Today's Monday, March 13th. It is 4 o'clock right now. Our scheduled mentoring session is typically at 2, but for this session, we're holding it at 4 due to a couple of requests for afternoon traders. So I'm just going to go ahead and set up this room real quick, and then we will get started with our analysis shortly. So there's a couple of things here to look at. If you guys have any questions, feel free to put your questions in the chat. We have a couple questions regarding a couple of the strategies, but other than that, we don't really have too much to cover today. So if there's any questions that you guys have, feel free to drop them in the chat, and then we will go over all the questions for today. All right, everything looks good to go. Let me get this link sent out to you guys here in the premium. All right. All right, guys, good afternoon, everybody. Looks like there's still people making their way in, so I'll get a few moments for people to join. So today is Monday, March 13th. It is 4 o'clock right now. Our scheduled mentoring session was for 4 o'clock today. Typically, we have it at 2 o'clock, but a few of our afternoon traders requested that I hold it a little later today so that they can attend. So we're doing that to accommodate for the other members here in the group. So if you guys have any questions, feel free to put your questions in the chat, and I can answer whatever you guys need help with. Hey, Martha, how's it going? We have a couple questions here from Zachary. Zachary's asking if I can review the following strategies for the breakout 2.0, and the daily 10-minute. So I'll look over those strategies today. If there's any other questions you guys have, feel free to put your questions in the chat. This is your time to get, whatever help you guys need with regard to analyzing any of the strategies that you guys are interested in, or if you need any examples. So I'll be going over those questions first, and then we will we'll go from there. So I'll give a few more moments for people to make their way in, and we will get started shortly. Question from Martha. Martha's asking, why don't we take the breakout anymore? We don't take it because we're only taking those 3 strategies. So our goal for this year was to take only those 3 strategies to show you guys that that if you could stick to just 3 main strategies, you'd be fine. You can take the breakout. Other people take the breakout. It's just we don't take it on the live because our whole plan for this entire year was to focus on 3 main strategies. Because the problem with a lot of traders that join the group is that they try to do too much, right? They try to learn like 20 strategies at once, and they fail at everything, right? So like what I'm showing you guys is discipline to stick to just 3 strategies, and that you guys can find success doing just that. I'm trying to show you guys like how simple it is. So the breakout's still fine. You can take it if you like, Martha, but we just don't take it on the live because the thing is I'll be applying, like I can apply all the strategies. I know the strategies like by heart because I created all the strategies. So the thing is, if I like, you'll see me on the chart, I'll analyze stuff and I'll tell you there's a V1, there's a V2, there's a V3, right? But people in the group don't know all that stuff. So like what happens is when I start to mention a lot of these things, people get very confused. And the thing with the breakout is that a lot of people weren't applying it properly. So I don't think it's a good strategy meant for beginners. Obviously the strategy still works very good because a lot of people in the group still apply it. But I don't think it's a good strategy for beginners because it moves so fast. And if you're too late to enter those trades, you can be stuck in it, or you might go straight to your stop loss. So I'll go over those breakout entries to show you guys, how it's applied. and that they still work, but it's just not one that we typically apply because I'm trying to focus on just two strategies. So like basically during our live sessions, I'm focusing on the momentum scalp failure, which is risky, but it still hits. So this still works. But the main strategies that I'm focusing on, that I'm personally taking myself, are the momentum scalp variation and momentum scalp, right? So if you look back to all the results from, this year so far, if you look at all the trades that we've taken that have been official trades, they've pretty much just been like momentum scalps, right? Like for example, last week we took 1, 2, 3, 4 momentum scalps. They were all wins, 0 losses last week. So I'm just showing you guys that if you guys can focus on like 1 or 2 strategies, you guys can do perfectly fine. Of course, once you guys get better, you can add more strategies to your list. But for now, I think it's best to focus on just a couple. So like the week before that, let's see, last week it was like 4 momentum scalp entries, all full TP. The week before that, we had 1 trade, which was a momentum scalp variation, right? So like every week we typically take like only a few trades, but they all hit TP. So my main goal here is to improve your guys' consistency, because the thing is, you don't have to be rich overnight, right? Like you can be rich over time. Like for example, if you just take trades, like we didn't have trades like the week before last week, but we just haven't had any losses. That's a good thing. The thing is, if you don't lose trades, it's impossible to blow your account. Because my main goal here is really to get people past their challenge, even though it takes, it might take longer if there's not a lot of trades within a week or so, but I want to make it where you either get a free retry, you get an extension, or you pass, right? My main goal is to show you guys that it's really hard. I mean, it's not really hard to fail as long as you follow directions. But if you follow directions with the strategies that we're applying on the live session, mainly these 2 strategies down here, it's like almost impossible to blow your account. Like it's literally impossible because we don't really lose very many trades. And if we do lose a trade, it's like 1 trade out of a month. And it's just showing you guys that, if you guys can be consistent and disciplined, you guys will get to your goals. You just have to be on point with your trading plan. So that's the main reason, Martha, but all the strategies still work perfectly fine. Let's see, question from Angela. Angela's asking, hey, Sean, can you go over the intraday momentum strategy? Yeah, sure. I mean, we can go over that too. So let me see. I'm going to put a list up here so that I can know what to look for. So we have a couple of strategies here that I'm going to look at first, Angela, and then we're going to go over your question too, because yours is pretty simple. Basically right here for Zachary, we're going to be looking at breakout 2.0 and the daily 10-minute. So I'm going to go over those first because this is going to be easier for us to just cover. And then from there, we'll go on to your question, Angela. So just hang tight. I will get to your question. It's just going to take some time. So I have to go over these first strategies for Zachary here. So Zachary asked about the breakout. Original breakout. So for the original breakout, let me just look right here. Okay, so the requirements that we have for this, or the indicators we're using, are the pivots, momentum, and I think that's it in the trend meter, just to confirm like the trend and whatnot. So I can't remember what the trend was this morning, but we'll try to figure it out as we look at where price was going this morning. So let me just show an example of the breakout on the 1 minute. Okay, so market opened over here on the 1 minute time frame. So I can't remember what the bias was this morning. I know for the trend it was bearish. So you're right, Christian, it was bearish on open. But the thing with fundamentals, I think fundamentals were bullish. And I think because the thing with this is different. For this is hard to backtest because you can't really. The thing is, I don't really look at this stuff anymore. Like I don't look at retail sentiment and I don't look at fundamental bias typically in the morning because I don't apply the strategy anymore. But so the thing with this is you can have a bullish trend on the 1 minute, but you could have a bearish trend on the 1 minute here. But then again, you can have also a bullish, like you can be opposite. You can have a bullish retail sentiment and bullish fundamentals, but you have bearish technicals, but you'll have 2 out of 1, right? Or 2 out of 3. So you have 2 out of 3 that are bullish and you can still take the buy here. So I'm just going to assume that the market was bullish here because this is the only entry for the breakout. There was no entry for a breakout for a sell. So I'm just going to use this as an example just to show Zachary like how it's applied. But doing this real time, you have to actually check for this stuff. Okay, so what I'm going to do here is I'm going to show you guys how this entry would be applied. However, I can't really confirm bias. Well, actually, the bias isn't really necessary. You can see right here, it says optional, but highly recommended. So you don't necessarily need to follow the bias. You can just go off like where price is currently moving. So there's two different ways to apply this. You can apply it with a bias, or you can apply it without it. I'm just going to apply it without it here because I can't confirm the bias since we're like so far into the market. This was like 6 hours ago or 8 hours ago. So I can't just go back and see, okay, what was the retail sentiment at 6:30 and where was the fundamental bias and stuff like that. Technicals, obviously, we knew was bearish, but it wasn't necessarily fully bearish because you can see right here, Christian, that the 1 minute is obviously bullish. So a market open right here at 6:30, market was bullish here. So we'll just assume that everything here is bullish. Again, this is optional requirement too, so you don't really need to confirm this. So we can just skip over it. We're just going to assume that it was bullish here, and I'm going to go over every requirement except for the second one because it's optional. So for the breakout, this is the regular breakout 1.0 original breakout strategy. First, you want to look for an entry after 6:30 a.m. Right? So 6:30 is going to be right here. This is where market open, 6:30 a.m. This is the following candle. This is a 6:31 candle. So we're going to skip step 2 because we can't confirm the bias, but we're going to go to step 3. So step 3 is confirm direction of momentum using the K2 momentum indicator. Right here, we have a buy signal. So we're obviously looking for a buy here for the breakout. For step 4, you want to confirm a strong candle in the direction of momentum. So basically a green candle with minimal wick on the top, or a red candle with a minimal wick on the bottom. Right here, since we're looking for a buy, we're looking for a strong green candle, right? This right here is obviously a strong green candle because we have a decently sized body with a very small wick on top. So this right here would be the breakout entry. Once you have this entry right here marked up, you would enter for a long position right here for 500 pips. You have everything set up right there for breakout 1.0. You let the trade run, and there you go, full TP. So this is an example of the breakout 1.0. I'll find another example from, I believe, Friday. I don't think we take breakouts on Friday, but I'll see if I could find the entry over here. But you can see how simple it is. It's simple, but the thing is, like, people like still mess this up. So it's not a strategy that I recommend people do unless like you're really comfortable with taking it, because it's very people get really greedy when taking these types of entries here. So looking at this over here, let me go back to, this is from Friday. I wouldn't have taken this trade on Friday because Friday was NFP, but I mean, we'll take a look at it and see if I can find anything here. So looking at this right here, we have a buy signal. There's a 6:30 candle right there. All right, so wick's kind of big right here. Wouldn't have taken that for the breakout. And it has to happen within the first 5 minutes. So you can see right here, if we don't get a strong green candle within the first 5 minutes, then there's no entry. So right here for Friday, there was no entry. The reason for no entry is because we're looking for a strong green candle. Right here, we had a buy momentum. So we looked for entry after 6:30. There was no strong green candle. This candle here, the body was big, but the wick on top was also very big. So we wouldn't have taken that trade there for a buy. So there's no breakout for last Friday. Let's go back to Thursday and see if we could find one here. All right, let's keep going along. Thursday morning right here. All right, so Thursday morning, 6:30. Markup opening price. Okay, 6:30 right here. Let's rewind this. All right, so again, right here, we're looking for the same thing, right? We're looking for entry after 6:30. 6:30 is right here. You're looking for a strong green candle. The reason we're looking for a green candle is because we have a bullish momentum right here. We have a buy signal. So we're looking for momentum. We're looking for a push in that direction. So this candle is not a strong green candle. Wick on top is too big. This one's a doji. It's not a strong green candle either. This is still wick on top is too big. Okay, this is a strong green candle right here, right? So this candle came up at 6:34. It's okay for entry. Take that right there for a buy. TP stop loss, 500 pips. Let the trade run, pushes up a little bit, pushes around. I think this trade might have came too late. So this one right here didn't play out. So the thing with this here is that now that, because I just realized the entry happened at 6:35. I think this might have been too late for entry because it has to happen within the first 5 minutes. So if this happened on the prior candle, it would have been okay. But this one right here, I wouldn't have taken it because it happened right at 6:35. This is another reason why we don't take the breakout very much, is because you don't really get a strong movement on open. You kind of get a back and forth movement, and it's a little difficult to take. But this is kind of what we guys are looking for the breakout. You're looking for entry after 6:30 a.m., which is market open. You're confirming overall bias. You can't confirm this because we have to be in the market at that specific time to look at retail sentiment and fundamentals. Technical bias here is obviously bullish. Confirmed direction of momentum, bias sticking right there. Confirm a strong candle. So this right here would have been a strong candle, but the entry came up a little too late. So right here it says note only valid first 5 minutes of open. The actual entry would have happened at 6:35. So I don't think we would have taken this trade because it's a little too late. You have to have it before 6:35 because at this point it's already past 5 minutes into the market. So let me look back for one more example from the day before that, which was Wednesday. And I can't remember what was going on. I know the bank collapsed here on Thursday, but I don't know if there was any other news that was happening on that day. The thing for this too is you have to also take into consideration the red flags. So let me just go over here real quick and see if there was any sessions around this area. All right, so it was like around the sessions, but it still would have like, the main point is that the entry happened at 6:35. So like typically this entry is supposed to happen like within the first couple candles, like the first 3 candles. If you don't have that breakout on open, then it's no longer a breakout, right? Because you already skipped, I mean, you're pretty much missed out on the breakout movement. And that's why you want to take it within the first 5 minutes. So let me go over here real quick. But the good thing about this strategy is that it's a 1-to-1. So like this strategy does hit more often than it doesn't. So even if you lose a couple of trades, you know, if you, as long as you use proper risk, eventually you're going to make it into profit long term. So right here we have, let's see, market open right here. Okay. So 6:30 was right here. I'm going to go and replay it and look for another entry here if we can find one. All right, so 6:30 was right here. You're looking for a sell because we have a sell momentum right here. So for example, here we're looking price go forward. This red candle is not a strong red candle. Big wick on the bottom. This one over here. Strong red candle right here. Okay, so this candle came up at 6:33. This would be the entry for the breakout. You take your short position right there. This is the breakout entry. So the reason why this is the breakout is because first you want to look for entry after 6:30. This is after 6:30. You can confirm the bias if you want. It's not really necessary, but it's optional. Third, you want to confirm the direction of momentum. Right here is a sell momentum. So obviously you're looking for a sell. Fourth, you want to confirm a strong candle in the direction of momentum. Right here, we have a sell momentum. So we're looking for a strong red candle, meaning a red candle with little to no wick on the bottom side. So like right here, we have a strong red candle, the wick on the bottom, super small. So this fits criteria. Would you have this set up right here? This is going to be your entry for the breakout. You have this lined up. You can see their price kind of bounces around a bit. Bounces around a lot, actually. I think this was like one of the choppy days, but eventually it comes down and hits TP. So there's another example of the original breakout. So as you guys can see, it's not really difficult, but a lot of the steps here get missed. I think the main problem is that a lot of people aren't able to identify what a strong candle is, right? And this all comes with practice because it's very subjective. That's the main problem with the strategy. And this is why it's not good for beginners, because it's hard for them to tell if it's a strong candle or not. Not everyone can determine if it's a strong candle or not, and then it kind of throws people off. So for me personally, I don't think it's a good strategy for beginners, but if you guys are okay with it, you guys practice it enough, you guys can spot these and get into these pretty quickly. This trade here took a long time though. Typically the breakout happens right away, but this one right here was active for about 27 minutes until it hit TP, blasted right through. So this is the example of the breakout 1.0, regular original breakout. Next question from Zachary is to cover breakout 2.0. So let me go over here real quick. I'm probably gonna have to use this chart because it requires, or not this one, the big chart. You're doing it on the higher time frames. So for this one right here, I'm going to go over to 630. You're kind of confirming what the overall bias is or was at the time. All right, so 630 is right here. I'm just going to rewind to 630. All right, 630 right there. And 630 right there. All right, so looking at this right here, I'll put the requirements for the breakout 2.0. We're going to go on over the breakout 2.0 now. So breakout 2.0, where I put it at? Where's that? Breakout 2.0. Okay, so first you want to confirm trend on the 10-minute, 30-minute, 1 hour time frame. So looking over here on the 30, 10, 1 hour, 10, 30, and 1 hour, you can see that price is bearish, right? Price is obviously bearish because price is below the pivots, trend meter is red, and the pivots are angling down. So step one's met. You're going to confirm the trend here. Second, you want to confirm direction momentum. Right here, we have a bullish momentum, right? So with that said, there's no entry for the breakout 2.0. In order for us to have an entry here, we need momentum for a sell, and we also need a bearish trend. So for today, there was no breakout 2.0. Let me go back to Friday. We wouldn't have the breakout on Friday either because it was heavy news. So let me put the criteria up there again for the breakout 2.0. I think it says to skip if there's a heavy news on that day. So you wouldn't take it on Friday, but I'll see if there's an example there. So right here, it says avoid entries on pre-market high impact news days. Friday is obviously a high impact day because it was NFP. Obviously you guys can see here, it's super choppy. So we wouldn't have taken it on Friday. See if we could find one here on Thursday. All right, Thursday over here. Let's see. Price is bullish over there. I can't remember if there was news on Thursday. I'll have to check the calendar. I just know there was a lot of news recent. Well, it was all NFP week. So like it was high impact news pretty much all week, like every single day. So I don't think there was any breakout 2.0s on that day, but I can take a look. Thursday. Okay. All right, so looking at this over here, we're looking at Thursday. There's no overall direction of trend. So if you look over here for requirement 1, breakout 2.0. All right, so first you want to confirm the trend on the 10-minute, 30-minute, and 1 hour time frame. So looking over here on the 10, we have a bullish trend because price is above the pivots. Trend meter is green, pivots are angling up. Here on the 30-minute, price is also bullish because price is above the pivots. Trend meter is green, pivots are angling up. However, here on the 1 hour, you can see that there is no overall trend because this right here is bearish, right? Price is below the pivots, trend meter is red, pivots are angling down. So there's no entry for a breakout 2.0 on Thursday. I guess we could check Wednesday. So as you guys can see, these entries don't come up too often. I mean, they do come up somewhat. I think the breakout 1.0 comes up more often than the breakout 2.0, but the market's been choppy for like the last for like a long time now. So it's a little difficult to find these entries. I think there was one here on Wednesday though. So Wednesday actually looks fine. Yeah, Wednesday actually actually lined up fine. So looking over here on Wednesday, I'm going to put the same criteria back up. So again, right here, you want to confirm trend on the 10-minute, 30-minute, 1 hour time frames. Right here, you can see on the 1 hour, price is bearish because price is below the pivots, trend meter is red, pivots are angling down. Same thing over here on the 30, price is below the pivots, trend meter is red, pivots are angling down. And then lastly, right here on the 10-minute, you can see that price is below the pivots, trend meter is red, and the pivots are angling down, right? So requirement 1's been met. We've confirmed the trend on the 10-minute, 30-minute, 1 hour time frames. Second, you want to confirm direction momentum. We have a sell signal right here, so we're obviously looking for a sell. Enter on the open candle in the direction of momentum. Right here is market open at 630. You would enter a sell position right here. TP stop loss set to all right, so 1,500 looks too wide, so you probably use 1,000. I mean, 1,000 looks kind of wide too, so we might have to even use something smaller, but I think it'd be better off just using 1,000. So you let the trade run right there, and you can see it go straight to full TP. So I just maximize the 10-minute. Here's a breakout 2.0. There was only like one entry this week, or from what we've seen, There was only one entry right here on Wednesday. There was nothing on Thursday. There was nothing on Friday. But right here on Wednesday, this is breakout 2.0, full TP, like immediately on open. Looks like it took about like 10 minutes or 20 minutes for it to like make its way. But eventually price did spike down and blasted right through the TP right there. So there's another example of a breakout 2.0. Let me see if I could find one more for the previous day on Tuesday. All right, let's see. Tuesday over here, market opened at 6:30 right there. All right, so it looks like there was 2 entries for the breakout 2.0 for last week. So again, right here, you're looking for the same thing. You want to confirm the overall trend. It's kind of difficult to see what the overall trend was here because price was like barely making it across the pivots. But if you wanted to assume here that it was bearish, because it was bearish here on the 10, bearish here on the 30, kind of bearish here on the 1, but it's like barely starting to shift. You can assume that it was bearish. So if you assume that it was bearish right here, you would have had a downwards trend. So again, here are the criteria for breakout 2.0. Confirmed trend on the 10-minute, 30-minute, 1 hour. It was bearish, obviously. Confirmed direction momentum. We have a sell signal right here. You enter on the open of the following candle, like on the open market right here. Take that trade for, let's see, 150. It's kind of too big. Just go for 1,000. So 100. You have all the criteria there lined up. Let the trade run. So you go sideways for a little bit. And you can see right there, it blasts right through the full TP. So looks like last week there was 2 wins for breakout 2.0. There's a win on Tuesday, a win on Wednesday. I'll look for one more on Monday, and I'll see if there's, one more there. All right, here's market on Monday, 6:30. Monday at 6:30. I mean, you could just assume it's bullish. It's pretty bullish right there. I probably don't have to look into it too deep. All right, so looking at this over here, 10 minutes bullish because price is above the pivots, trend meter is green, pivots are angling up, same on the 30 and same on the 1 hour. So with that said, this would be the entry. Right there, we set criteria. Looks like 1,000 pips is enough. So again, guys, everything here is bullish. We confirm direction momentum. There's a buy signal right there. We enter on the open of the market right here at 6:30. Let the trade run, go for 1,000 pips. Price bounces around a bit. Full TP. So it looks like there was like 3 wins for the breakout 2.0 last week. If you took it on Monday, full TP. Tuesday, full TP. Thursday and Wednesday, full TP. 3 days back to back, full TPs for 1,000 pips each. Pretty solid entries if you guys want to take it. I was taking this before, but the thing is, it just eats up too much of my margin. So I don't want to be holding on to a position for, let's see, like if I took this here, I would have been holding on to it for like, like an hour. And if I eat too much of my margin, I can't take any other trades. So that's why I haven't been taking these trades here, but they still work perfectly fine. So there's the example of the breakout 2.0. Let me see the next question here from Zachary. So Zachary's next question is the daily entry. So let me go over here real quick. Let's see, 10-minute daily entry. I mean, for the 10-minute daily entry, you're just looking for the first momentum signal, and you want to confirm the overall bias. So again, we can't really confirm the overall bias here, guys. I'll try to confirm it, but okay. So for example, right here, we have a sell signal, right? This is not going to go against, this is going against the trend because the trend here is obviously bullish. So we wouldn't have taken this here for the daily entry. So there's no daily entry on Monday. And entry has to come before 9. So nothing right there. Let me just go back. I'm going to go backwards so it's easier for me to just look at. So, all right, let's go from today. So today we had a bearish bias. We have a sell signal right here, but it came a little late. Let me pull up the criteria for the daily. Yeah, so the cutoff for entries is at 9 o'clock. Typically, I mean, some people still take it. So you can see this entry here actually came up at 9:10. So, I mean, it just depends on the person, right? If the person still wants to take the trade, they could take it. We knew that price was bearish today. So, if someone wanted to take the sell here, they could have taken it. and it would have hit TP. It's not one I would necessarily take. It's hard to tell like what the direction was. If you guys remember from the live session today, price was going up and down a lot. It was like, but the overall bias for the higher time frames has been bearish pretty much all day. So if you guys remember from this morning, we were looking at the higher time frame, so I already knew price was bearish. So just depending on the person who's applying the entry, you can see here on the 2 hour, 1 hour, and 30-minute, price is pretty much bearish all morning. So if you would have waited for this entry here, the daily entry, you could have taken the trade here. So like the entry would have came on the first momentum signal. So here's the criteria. Look for entry after 6:30 a.m. Market open over here at 6:30. Confirm overall bias. Price was bearish in the morning, so you're looking for a sell. Confirm the first valid K2 momentum signal. This is the first momentum signal right here for a sell. This would have been the entry for the trade for the daily. If you took that trade there, you can see price eventually kind of comes down and it blasts right through TP right there. So the daily entry for today would have hit TP. That's there's none for Friday because we don't take it on Fridays because market closes early. Let's check over here on Thursday. I don't think there was an entry here on Thursday, but we'll see. So again, I can't really figure out what the direction was for the market because, as I mentioned, you have to check the overall bias. But just looking at this, we're just going to look at it from a basic perspective. Basically, the first momentum signal after market open. Market open right here at 6:30. First signal came up right here for a sell signal. It wasn't a valid momentum signal. So this right here wouldn't have been an entry. So we would have skipped this one here because it needs to be a valid momentum signal. In order for it to be valid, if it's a sell signal, it has to have a red candle within it. If it's a buy signal, it has to have a green candle within it. Since this here is invalid, this wouldn't have been an entry to take, even though it does hit TP. So you can see right there, it comes down and it hits TP. Let's go back to Wednesday. All right, so there's no entry here for Wednesday. You can see right here, there's a buy signal. I can just eyeball it. So like going over here, you can see that price is obviously bearish. Like you don't even have to like think because like you can see it's been bearish since like Tuesday up until Wednesday. So for Wednesday over here, market open at 6:30. There's a buy signal right here. Obviously trend and everything here is bearish. So you wouldn't have taken this buy here. So there's no entry right here on Wednesday. Let's go to Tuesday. So you can see a lot of these daily entries are kind of tough because we already have a sell signal. In order for you to take the entry, you have to look for the first momentum after it. That's why this is kind of best to be used with a breakout, because if you don't have a breakout, you'll probably have one of these. If you don't have one of these, you probably have a breakout. So the breakout here is for a sell, but for the daily entry, you can see obviously here there's no entry for you to take because market open here at 6:30. There's no momentum signals up until like 12 o'clock. And this momentum signal wasn't even one that you were looking for because trend here was bearish. Monday, let's see if there was a daily entry on Monday. There's no daily entry on Monday. And I can just see that from eyeballing it right here. You can see market open at 6:30. First signal here was a sell signal where price was bullish. So you wouldn't have taken the sell there. You wouldn't have taken the trade. If you want to do the original daily entry, so like the original daily entry didn't take into consideration the trend. So like we added this later on to improve our win rate, confirm the overall bias. But if you want to just ignore that, which you can, I mean, that's the original way of applying it. You just look for the first momentum signal after market open. The only problem with this here is that there's a mid-market reversal. So if the entry comes a little too late, then you probably shouldn't take it because it's a mid-market reversal that's happening. So with that said, there's no entry on here on Monday. Looks like last week there just wasn't very many entries at all with regard to the daily. This is one that I typically don't like applying because this one's just too big of a move. The problem with this strategy here, it does work when it comes up, but the thing is, sometimes you'll take the trade and the market will just go flat. If the market goes flat, you'll be holding this trade for like 24 hours. It's like way too long of a trade to hold on to. And the thing is, if you're trading with FTMO, it's not a good thing because your drawdown carries over to the next day. So the daily strategy is not a strategy that I personally like to use anymore. I used to apply this with my personal account because there was no restrictions. I could just take trades and hold on to them forever, right? With FTMO, this is not a good strategy to use because you have to clear out of your positions by the next day. If you don't clear out of your positions, you're going to go into drawdown the next day and you're just going to carry it over. You're going to waste pretty much your allotted drawdown limit. So for this specific strategy, I don't recommend using it if you're trading it on FTMO or any type of funding company. If you're trading on a personal account, that's perfectly fine because that's your account. You can hold it for like days if you want. It wouldn't really matter. But I would not recommend trading on FTMO or any of those other funding companies, because the cutoff is like, I think it's like 5 p.m. Pacific time. So like if you're holding on to a position that's in drawdown, your drawdown is going to carry over to the next day, and then you're going to be screwed because you can't really have your drawdown extend too far out. Martha's asking, what is the cutoff time for the daily again? It's 9 o'clock. So right over here, cutoff for entries is 9 o'clock Pacific time. Yeah, so I don't really recommend this, guys, if you guys are on a funding company, because that's how people blow their daily loss limit, because they over leverage and they hold on to the position for too long. And then once they enter a second trade right after, they've already pretty much eaten up all of their drawdown and they don't realize it. All right, so that's it with Zachary's questions. Breakout 2.0, daily 10-minute. Next question is from Angela. So Angela's asking about the intraday momentum strategy. So which one are you referring to, Angela? Because there's a lot of different intraday momentum strategies. Are you talking about the intraday momentum scalp, or the ones that are taken on the higher time frame? Because it's the same strategy. So I can show you what the intraday. So there's this. I mean, it's done on like different time frames. Okay, for the scalp. Okay, so this is one you're basically talking about, right? Intraday momentum strategy for scalping. So for scalping, we're going to be using the lower time frames, basically the 1 minute here. You can either use the trend meter and just set it up the way that you're looking for, or you can just so like basically if you're trading here on the 1 minute, you'll use the 1 minute, 3, 5, and 10. I think that's it, right? I haven't done this in a long time, but I'm pretty sure this is probably the one that you want to use. So for this strategy right here, if you want to apply it on the 1 minute, so here's the intraday momentum strategy. All you're looking for is for the momentum signal to match the trend meter down below. So if you're trading this on the lower time frames, you just want to line it up with the lower time frames because you're looking for entries on these quick moves. So for example, right here, you can see how this entry over here is a valid entry because you have a sell momentum with a red trend meter, right? If you have that lined up like that, that's going to be your entry here. And then you can use the same parameters that we use for the other scalp entry. So basically all of the 1 minute scalp entries, you can use at 10:30 or you can use at 25:50, depending on like where the market's looking. So right here, I probably would use at 10:30 because if you use at 10:30, you can see that it pretty much engulfs all the candles right here. If you want to be very careful, yeah, of course you can go higher to a 25:50, but these are scalp moves. So you want to be in and out of these positions super quickly. So I'd probably use a 10:30 split right here. You're just using this. So like for first requirement is you want to confirm the momentum signal here is matching the trend meter. That's pretty much it. You're just matching colors with colors, right? Red and red, green and green. So right here, and for the trend meter settings, again, for this on the 1 minute, I set it to the 1 minute, 3 minute, 5 minute, and 10 minute, because you don't care what's going on, you know, an hour from now. You just care what's going on right now, first 10 minutes, because that's when your entry is happening. So with that said, you have the criteria here lined up, you let the trade run, and you can see it kind of bounces around a little bit, but it eventually ends up hitting TP right there. So this is like the easiest strategy that anybody could apply. Like all you have to do is match colors. That's literally all you're doing. But also you have to keep in mind the red flags. So for example, right here, there is a buy entry, but it's like literally at the sessions, right? So you would not have taken that trade right there. That's a definite no. This is at the sessions too. Let me go back a little further. All right, I think this is a better one right here. So again, same thing, Angela, you're just matching colors, red and red. So you got a red momentum right here. You got a red trend meter right there. You got everything lined up. You take this for a short position. All right, looking at this right here, looks like a 10:30 might be a little too tight. So I'd probably go for 25:50 right there. It's still kind of tight, but if you really wanted to take this trade, I'd use a 25:50. So you got that set up right there. You let the trade run, full TP. I mean, for this strategy here, so the proper way of doing this is a 1-to-1 risk to reward. That's the proper way of doing it, but you can see how big it is. It becomes a huge trade, right? Like, because today was a crazy day. Today's not like how normal trading days go. Like, so like, there's different ways of doing it. For me personally, when I scalp, I like using a set TP stop loss so I can just get in and out of the trades. for this is like a one-to-one strategy. So like, for example, here, if you're doing like, let me just go here real quick. So there's a couple different ways to determine what your stop loss should be. I would just use whole numbers. So like, for example, here, I'd probably measure what the candle was like. So if it's 300 right there, I would probably do 300, 300. I'll just go for a one-to-one. The proper way of doing it is you should probably put your stop loss at the swing high here. But as you can see, it's a pretty big move. It's a 970 pip move, right? It's going to be hard for you to figure out what your stop loss and TP should be, or your lot size actually, because this varies dramatically, right? If you're going from a 300 pip stop loss to a 900 pip stop loss or 1,000 pip stop loss, you got to use a way different lot size. So I think the market moves like a little too fast for you to do this, unless like you're quick enough. If you already have a number in your head, like, okay, this is the lot size. If you're using this type of stop loss, then you can change it. But not everyone's built that way, right? Like not everyone's like able to change your stop loss or their lot size fast enough before entering the trade. So for me personally, I like to just stick with 100 lot because it's just easier for me. I don't like switching between 100 lot to an 80 lot to a 50 lot. It's just too much work on my end. So for me personally, I usually only go into the trade with a 500 pip stop loss. That's like the max I'll do, right? Anything over that is just too much because I'll be over leveraging at that point. So right here, if I was to take this trade and I lose the trade, I'm risking like 2%, which is not a big deal, right? Or less than 2%, not a big deal. But that's only because I know like that's what the lot size is. If I'm going to go for 1,000 pips, of course I'm going to go for a half lot size. Still risk the same amount, but it gives me more room to take these entries here. So for me personally, I'd probably do a one-to-one. So I do like a 30-30 or I do a 50-50. Or if you're like really like uncomfortable and you just want to get out, you can use a 10-30 split. It's just really up to your preference. For me personally, I probably would have entered this with a 50-50, let the trade run, full TP right there. There's another entry right here. Same thing, you got a red momentum signal, red trend meter, short position right here. See, this one's a little tricky. 75, this is where your TP should technically be, because with these types of entries, you're looking for swings in price. So technically, this is what it should look like, but you can see it's a big difference compared to a 30-30 or a 50-50 split. So like, for example, here, I for sure wouldn't use a 30-30. Reason for that's because stop loss is too tight. If price was to retrace up, even a little bit, it would stop me out before it hits my TP, right? So if anything, I'd probably use a 50-50, or in better case scenario, like this is such a big move right here and the market was so volatile, I'd probably just use a 75-75 to be safe. Because like the thing is, if the market's moving so volatile, it's only been like 3 candles, right? 3 minutes. And in 3 minutes, prices pushed down 750 pips. That's a big push for like 3 minutes. So for this right here, I probably would, I mean, if you're going to trade and the market's super volatile like this, I would probably stick to the swing highs. That's probably going to be your best case scenario, because if you don't, then it's going to be really easy for you to get caught in any drawdown here. So let's see if price kind of plays out here. Yeah, look at this drawdown right here. So see how the volatility is so high? The drawdown is so massive that if you use the 50-50 here, you would have been stopped out, even though price would have came down and would blasted right through your TP eventually, right? So the thing with this is that today's market was like an outlier. It wasn't necessarily like a regular trading day, because if you guys have seen, for the past couple of weeks, we've been using a 10-30 split or a 25-50 split, and it's been perfect. Drawdown has been okay. Price might draw down a little bit and then it'll hit your TP. But for this type of market today, the market was so volatile that you would have to have like a really wide stop loss in order for, well, not really a wide stop loss, but you'd have to use a proper stop loss. So your stop loss would have to be at the swing high. That's how that strategy is applied. Yeah, if you look back at the videos, so let me just show you the videos over here, guys, if you guys want to take a look at it. Let's see. Curriculum. All right, so here's the strategy course. Let me just scroll down to the intraday scalp. Yeah, so if you look at the original intraday strategy, Angela, this is like, if you were to watch the original strategy, you're going to see that I'm telling you to put your stop loss at the previous swing. The thing with today's market is that today's market was built for this type of strategy, because this is how the market was moving when I created this strategy. When I created this strategy, I think I created it, I created this strategy like 5 years ago. The market was very volatile. It was moving how it's supposed to. Right now, it's like kind of hit or miss. Some days it's moving very volatile. Some days it isn't. So like it's really hard to determine where your stop loss should be. But if you're using it properly, like the original way that it was created for, you would place your stop loss at the previous swing. But lately for these scalp entries, we typically use like a fixed TP stop loss, like a 1030, 2550. But now that the market's starting to move again, very volatile, we might not be able to have like a fixed TP stop loss. So we'd have to like place our stop loss how it originally was meant to be played. Like for example, over here, the only problem with this is that it makes such a big difference with your lot size. Like you really have to change your lot size because this movement here is so huge. Like, so for example, right here, if you were to apply this how it's originally created, this would have been 150 TP stop loss. It does hit, but the problem with this is that you're going to be holding on to this trade for a long time. It turns into an intraday trade, right? It does hit TP eventually, but this is no longer a scalp trade anymore because you're holding on to this trade for like 30 minutes. But if you watch the video here, this is where it'll explain, you know, the original strategy. I think there's another one here. So if you go over here to the, where my scalp strategies at? Yeah, actually, we don't even have the scalp version here because all we did was we applied the same strategy, but we changed the TP stop loss. So yeah, if you're looking for the scalping strategy on this one, Angela, it would probably fall under the pivot scalp because you're using the pivots. That'd be the closest thing to the scalping strategy for the intraday scalp. But the intraday scalp is meant to be applied like how it is right here. That's why I never made a new video for it, because this strategy video was like the same exact video that I created like 5 years ago. It's the same exact strategy. Nothing's changed. Let me just open it right here. See what the requirements are on this one. And these videos are so annoying. You guys probably get these advertisements all the time, where like they guarantee you a funded account or guarantee you trading robot and stuff. That stuff doesn't work. Okay, so let me see. So the requirements over here for the intraday strategy. And this stuff is like, so the thing with this is that you can apply this on pretty much anything. This video shows you how to do it on the higher time frames, which is like the 1 hour and up. It's not necessarily, it's not required to trade on those higher time frames. You can trade on the lower time frames. I was trying to find the scalping one, but I don't even think I even created one of those because the strategy was meant to be, applied on the higher time frames, but you can apply it on the lower time frames. You just got to change your TP stop loss. Yeah. So what I would recommend, instead of using the intraday scalp, Angela, I would probably look at the pivot scalp, because the pivot scalp is the same thing as the intraday scalp, but it just requires the pivots as well. So you have a better confluence here because you're looking at the overall direction of trend. So let me see. And these videos are old. You can see how like the trading view is like, it doesn't even look like this anymore. So for this right here, I mean, you could apply these on different time frames too. Yeah, so if you want to apply that strategy, yeah, Angela said, I watched and you sounded so different. Yeah, no, these videos are old. So these videos, I created these strategies like 5 or 7 years ago, but they still work perfectly fine. Like they're meant to work in a trending market. So what I would recommend is to probably don't look at the intraday scalp, because the intraday scalp is so simple, but there's a lot of room for mistake because, or not really mistake, but you're gonna find more entries. And a lot of those entries are going to be not great entries because the criteria is so little. You're not really using the pivots here. You can see like, you know, if you match the colors up, yeah, you're going to find entries here and there. There's a lot right here that come up. The only problem is that I prefer to have more confluences. Like back then, I wasn't really Like I had a decent win rate, but it wasn't as good as it is now. But you can see the strategy still works fine. Like if you want to be as simple as possible, you're just going to match up the trend meter with the momentum scalp. So Martha's asking for the requirements for the strategy. I mean, the requirements for the strategy are like, there aren't really many requirements. All you're looking for is for matching colors, Martha. So you're looking for the momentum scalp and the trend meter to match. Like that's literally all you're looking for. So, I mean, you don't even need requirements for this because you're just matching colors. I would recommend following the momentum scalp. So momentum scalp is the same strategy as this because you can see here, but you confirm the overall trend and momentum on all the time frames. So yeah, exactly. Martha said no confirmation of other time frames. Exactly. So the intraday scalp is the same strategy as momentum scalp. It just has less requirements. So if you were to apply this strategy, I would recommend following this one because this is basically the updated version of the intraday scalp. When I created this strategy, the intraday scalp, the market was trending so easily where you can literally take every single trade and they would all hit CP. The market's changed. Like the thing that you guys got to keep in mind is that the market's always evolving and it's your job to evolve with the market. So for me, I created this strategy for you guys like 5 years ago. The market from 5 years ago is way different from the market today. The thing is, you'll still find good entries. Like, for example, if you want to be super simple and basic and you just want to match colors, you can take the entries here. You can see a lot of them do hit, but you'll see a lot of entries that don't come up as well. The thing with this strategy too, is that when I created this strategy, I didn't create the sessions yet. So back then we only had 2 indicators. It was just the trend meter and we didn't even have the high low. Like this is literally all we were looking at. We were looking for momentum and looking for the trend meter. But over the years, I've refined these strategies and created new ones that are basically the same strategy with more requirements. So if you want to apply the intraday scalp, Martha, I would recommend focusing on the momentum scalp. It's the same strategy. There's just more criteria there because you're confirming multiple timeframes. Multiple timeframes is better. I know there's more requirements, but you're going to find better entries applying this one here specifically versus the intraday scalp, which is just matching the colors. So you're looking for the same thing, except the thing is you're not confirming. So what you're looking at here is you're just confirming trend, or you're confirming the trend, but you're not confirming momentum on the 10 and you're not confirming momentum on the 5. So basically, if you want to look for the intraday scalp, this is all you're looking for. You confirm overall trend. That's what we use the trend meter down here for. And then you're confirming just momentum on the 1 minute. So I wouldn't recommend applying the old one. It's a question from Angela. Angela's asking, is momentum better or pivot to mimic the intraday? It would be momentum, Angela. So the momentum scalp is the same strategy as the intraday. However, it just has more requirements because before you wouldn't have to confirm the criteria on the 10 and 5. And what you can do here to make it easier is you can just use the updated momentum indicator. So like now you have the gold bars, right? Back then I didn't have the gold bars. So like what you could do here is you just match the gold bars with the trend meter. So like, for example, right here, because this is going to show you the momentum on the 5 and 10, right? So you have the momentum here on the 5 and 10. So all you're doing is you're confirming a sell momentum. So for example, here you got a gold bar here, right? So this is a red sell signal, but it's a gold bar. So this means that there's momentum on the 5 and 10. You have the trend meter down here that's also red. If you have that, then you can just take the entry right there. And if you want to apply this how it was originally meant to be applied, you put your stop loss at the previous swing. Again, like I mentioned, it's a little more difficult because you're using like different TP stop losses. There's no fixed TP stop loss. So you'd have to use a different lot size, but you can see here that you can just round it to the closest number. So like I would typically go from like 30-30 to 50-50 to 75-75 to 100-100. That's probably the easiest way because you can have like a set TP stop loss and a set lot size for those specific stop losses. If you start using like specific numbers like 47, you're not going to know what lot size to put, right? Because you're going to have to you have to do the math and be like, okay, what lot size would I put here when you can just branch it out to 50. There's another one right here. Same thing, stop loss at the previous swing right there. It's at 53. You can just round it to 50-50. You don't really need to put it to 50-53. And you can see right there, hits TP. This right here looks like it would have been a loss. Again, right there, 50-50. Let me see if there was a session around this time. I was at the session, so I wouldn't have taken the trade there. That would have been skipped. I think that's it for the most part. I don't really see anything else here. I mean, this wasn't even during, this was like Sunday. So this wasn't even during the trading session. Over here real quick. This was on Friday. I don't think there was much of a trend on Friday. All right, so this one right here would have been a loss. But if you're doing these all for like 1% risk, like for example, right here, so you're doing a 50-50 right here, and just make sure you're using a proper risk, proper lot size so that your risk is on point right there. That would have been a loss, but this one right here would have been a win. Same thing right here. So you can use a 75-75. I think those are the best numbers to really use when setting it up. So probably 30-30, or you could do 25-25, 50-50, 75-75, 100-100, and that could probably help with just having a fixed stop loss, fixed TP whenever taking trades. Down right there would have hit. Let's see if there's any more here. All right, got close to market close, so I think that was it for the entries here. Yeah. It's pretty much for the entries there. Again, right here. So I think this is probably the simplest way if you guys want to apply this. You just use the gold bars, turn the gold bars on. If you get a gold bar and it lines up with the momentum or the trend meter, you take that there. So right there, I'd probably use a 30-30 on this one. Or 25-25. I think that's probably the best way. Just use a whole number, 25-25, 50-50, 75-75. This one right there hits TP as well. And if you're applying this strategy, this is pretty much the same strategy as momentum scalp. So, I mean, basically you have a gold bar, matches trend meter. If I change this to, yeah, for the trend meter down here, you just have it set to chart and then 5 and 10. Because you have everything lined up. So, I mean, these are literally just momentum scalp entries. And you can see that they're still pretty accurate. Man, I want to take these trades now myself. So yeah, thanks to whoever mentioned this, but these entries here are hitting pretty solid. If you could do a 1-to-1, I think this is a pretty solid. Yeah, right here, there's a buy signal. So again, right here, same thing. If I go and replay this, I mean, this is some, I mean, I'm already applying momentum scalp entries, but now that I'm seeing it here with you guys during the mentoring session, there's a lot of entries here that come up and they all hit. Gold bar right there, green momentum. Take that right there. So this might be, maybe this is how we should be applying the momentum scalps. We should probably just use a fixed TP stop, or like, you know, one of these 25-25, 50-50, 75-75. Because right here, for example, this would have been pre-market. It's a gold bar right here with the green momentum down here, or green. So green bar, green momentum, green trend meter, everything lines up. This is for a 1-to-1 risk to reward. That could say, we could say this is a 1% gain. Perfect. Another one right here. 16. I think the TP. So we probably have to use a minimum TP stop loss, so maybe 25-25, like every time. That's probably the smallest, because anything below 25 is just, it's too small. So again, right here, another full TP. So I guess we could do that for these types of entries. We'll use a fixed TP stop loss, 50-50, 25-25, or 75-75, just for a 1-to-1, because this kind of gives us a better, I mean, obviously gives us a better risk to reward, and there's more entries that come up here. So right there, perfect. Another one right here. The only problem with this is I don't want to confuse people, but I mean, people will start to catch on to it. It's not that difficult, right, guys? Like, I think this is actually an easier way to do it. Um, I mean, it's pretty simple. Like you're just looking for it. I think the hardest part with this is setting the TP stop loss because you got to be really quick with it. Like if it closes, you got to have your TP stop loss set. And then now that we have a fixed TP stop loss, 25, 25, 50, 50, etc., you just got to make sure that you have your lot size ready to go. And then you pretty much just let the trade run because it's pretty simple. Like just looking at it here, there's a lot of entries that come up that we typically would probably miss. But now that we kind of have a game plan, we have a trading plan to follow. It's not going to be as difficult to just take them when we see these trades coming up. Yeah, Angela said they seem very solid now that you explain. Yeah, because I haven't really looked at the strategy in a while because well, I mean, this is the momentum scalp. It's just we don't look at this by itself. We're typically looking at like momentum scalp variations. But I mean, if you added the other momentum scalp variations here, so we have one right here, right? These are momentum scalps. These are also momentum scalp variations as well. So this entry right here, or this sell signal would have been a momentum scalp failure. So if you would have had this right here, now that I think of it, I think this might be a better way to set all of our TP stop losses. We either have it set to a 25, 25. The thing is, Kip mentioned this to me too, because Kip kind of mentioned that we should have fixed our TP stop loss at some point to have it where it's like a 1-to-1 or someplace close to it. Because I think what Kip does is he does like a 40-40. So you guys have seen Kip's profits, obviously. Kip's one of the mentors here in the group. Like Kip's profits from today, where's Kip at? I swear Kip posted profits today, but I don't know. I could be wrong. No, it's just C6 today. I don't think Kip traded today. Let me see if I could find his profits here. I know he traded the other day. He traded on Friday and the day before that. So let me see if I could find what his profits look like. So many people here. Okay, here's Kip. Okay, so looking at his trades right here, so you can see his lot sizes, right? He uses like a 40 lot right here, and he uses like a 25 lot right here, but he's using like a different TP stop loss. He's not using the fixed TP stop loss of a 1030 or 2550. He's using like 40-40. But I think now that we're looking at it, I think this is a better TP stop loss because, myself, I don't really like using negative risk rewards, but it's hard for me to explain to people sometimes because it's easier to just have a set TP stop loss versus having, the only problem is the spread. So that's what I'm going to be worried about because if the spread is like super weird, like today, if you guys saw the spread was kind of crazy for MFF, I think a 25 TP stop, 25 stop loss is too small. Because if it pulls back at all, it's gonna be messy. Let me see if there's any other entries here. Let's see. This is from Thursday. There weren't really that many entries on Thursday. There's one right here, but it was at the sessions. But let me see. $25, $25. I think $25, $25 might be a little too tight. But then again, 50-50 might be a little too wide. I mean, I guess we could give it a try. I think starting tomorrow, I'll probably try these out using a fixed TP stop loss. Short position right here. This is a momentum scalp. Unless we do 30-30. I think 25-25 should be fine. It's just going to be a tight move. Like it's obviously going to be very tight. 50-50 could be fine too. Let's look back at Wednesday. So this is how like I refine the strategies, guys. Like, this is why I like having mentoring sessions. I know a lot of people always ask me like, why do I hold these mentoring sessions? These mentoring sessions help me as well. They don't just help you guys, it helps me. Because right now I didn't really think about this, but we might be able to have a better risk to reward if we just use the fixed number instead of using what we've been using. But I mean, it's going to be it's always going to be a process, guys. It's not always going to be like straightforward. As you can see, the market's not always the same. It's not always moving smoothly. But when it does, so I don't see any entries here. I'm just looking for one. So there's one right here. Go and replay this right here. This is a momentum scalp, obviously. There's a couple entries here, actually. So there's one right here. So first, this is a momentum scalp failure. Right here. It's happening at about 8 o'clock. Same thing right here. We'd probably use a 25.25. See if it's too close. You know, it's just right. So right there, that would have hit a full TP. That is a momentum scalp failure. And then right here is a momentum scalp variation. You can see it closes below the pivots. 25.25. This one hits TP2. And then again, right here, this is a momentum scalp. 25.25, full TP. This is a momentum scalp failure, 25.25, full TP. Momentum scalp variation, full TP. Momentum scalp, full TP. These all happen after 8 though, so this wouldn't be during the live session, but if someone was trading after the session, it would have worked fine. So yeah, I think starting tomorrow, guys, I'll probably use a fixed TP stop loss. I got to figure out what my lot size would be though. So I'm looking to risk a max of 5,000 per trade. So I'd probably use 100 lot for a 25. I'd use 100 lot for a 50-50. For a, I'm going to try to see. Whoops. 5. You know, like MC4 does that. When I type in my, okay, so I'm just gonna use a 65. I just got to use whole numbers. It's just too difficult for me to play around with it. So for me, this is what I'm going to be using tomorrow, guys. So tomorrow I'll be using fixed TP stop loss for entry, depending on market volume or volatility, I guess. Volatility. So I'll be using on my 200K accounts. I'll be using lot sizes. So you guys don't have to use these lot sizes. I'm just showing you guys what I'm going to be taking. So I'm using 100 lot on 25 stop loss, 100 lot TP stop loss. I could probably increase my lot size for the 25, but I don't want to because the problem is that it's so tight that I'm taking on a big risk by having such a tight TP stop loss. So I'm going to keep it at 100. I'm going to try to aim for the 50-50s, though. I think those would probably be better. The thing is, the market isn't always very volatile, so it's going to be difficult for us to really like figure stuff out on the fly. But I'll try to be as vocal as possible when I try to figure out what these numbers are like. So, and then for a and I'll be using a 50 lot for my. All right, so I think this is not too difficult because I can just easily change the numbers like right before I take the entry. So these are basically the lot sizes I'll be using. I'll just practice this stuff out. If you guys want to use the old lot size, old TP stop loss 1030 or for 2550, you guys are more than welcome to keep using those. But I'm going to try to use these for tomorrow for a lot of these entries just to see. I mean, I'm going to be risking like about I think 2.5% per trade. So I'm be risking too much. Yeah, this is what I'll try to use. I'm gonna copy this and put this on my notepad too. I'm just gonna have these open. All right, guys. So if there's any other question that you guys have, I don't really have anything listed for my questions today. But if there's anything else that you guys want to cover, feel free to let me know. Let me scroll up to see if I missed anything. Yeah, I think I covered all of the strategies that you guys asked about. But like the new thing that we'll be kind of playing around with will be this fixed TP stop loss. I think this will work out a lot better. So that we don't just skip trades, because sometimes we'll see an entry and the candle's too big and we're like, okay, we're going to skip it. But now that I have a fixed TP stop loss, I can still take it. Like for example, there was a couple entries that happened today. Let me just go to today's market. Yeah, so there was some that happened this morning, but the candles were just so huge. Like for example, like these over here, right? Well, I mean, this was at the session, so I wouldn't have taken the trade there. But like this one, for example, never mind, it was at the session. Actually, there were like no entries today, but there were a couple entries that looked like ones that we would possibly take. Like, I forgot which ones we looked at, but we were looking at a couple here. I don't think they were momentum scalps. So I didn't really see any momentum scalps today, but there were a lot of momentum scalp failures that were still hitting TP. Like for example, this one right here, right? I remember this entry because we saw this towards the end. I didn't take it, of course, but if I was to take something like this here, and we're typically using just a chart for our okay, so like looking at this right here, obviously price is bearish, I mean bullish. So for this one right here, I probably would have used smallest TP stop loss is 25.25. Yeah, that's way too tight. Would not be using that for sure. 50-50 looks like it could be okay, but it still looks a little tight. Might have used like 75.75. I mean, today's market was different. That was an outlier. Actually, now I'm looking down at the trend meter. It wasn't even green. So I don't think it was really bullish at that time. I think the next one here would have been okay. Okay, so like this one over here. I think this one would have been better off. How far did this pull down? Actually, I did this thing wrong. So for this right here, if this was a momentum scalp failure, the entry would have been on top. It would have been on the bottom. So starting from down here, 25.25, way too tight. And 50-50 would have been a little better. Yeah, setup right there. Looks like it would have played out, but I wouldn't have taken that one. I mean, I typically don't take the momentum scalp failure to begin with. So let's see this right here. See, this one over here is a little riskier because so I'm going to try not to go for like 1,000 pip moves because that's just way too big for a scalp. I think the farthest I would go would be 75.75. But even this looks a little too far out, like a little too wide. I mean, it looks like it still works. It still played out, but super risky move. I wouldn't have taken that one though. I would have taken the other ones that came up. Like, so for example, right here, I don't take momentum scalps. I mean, I don't take momentum scalp failures. I would have taken the variation that came up right here. So this right here wouldn't be the entry I would have taken, but I would have taken this one right here. I think this is a better example to look at. So for right here, again, we'll try the same thing, 25.25. That's way too tight. You see the body of the candle right here is a little too wide. So I probably use a 50-50. This is like barely cutting it, like because it's like the low over here is still below it. So I'd have to make a decision whether I want to use a 50-50 or a 75-75. I probably use a 50-50. I think 75-75 would be too wide. And that one right there would have hit. And then this one right here would have been a momentum scalp entry. So I wouldn't have taken the failure there, but I would have taken the variation here. And then this one right here would have been the momentum scalp. So same thing again right here. Look at the 25-25. It's way too tight. Probably go with the 50-50. This one doesn't work out, but at least these are like the same risk reward. So like if you're doing a 1-to-1, this right here, you would have won and you would have just lost the profits from that trade. So you would have been back at break even. Yeah, CT said variation with the V1 is powerful. I agree 100%. So like for this one over here for the variation, I would have taken this one because it would have lined up. So you got a V1 variation there. And you also had a regular variation right here as well. So V1 variation plus momentum scalp variation. And that one right there obviously would have hit TP. All right, guys. So if there's any other questions, feel free to put your questions in the chat. I'm probably going to trade tonight. I'm going to be testing out NASDAQ during Asia session. So I don't see any entries here right now. I mean, price is kind of, there's no direction. But if I do trade Asia, it's going to be NASDAQ. So I'm probably going to trade these with like penny lots because I don't know what the lot sizing is like for NASDAQ. I don't want to risk blowing my account, taking too big of a lot size. So I'll probably be trading with a probably a one lot first or even less. And then from there, I'll increase and see what the lot sizing is. Unless you guys know what the lot sizing is. If you guys know what the lot sizing is for NASDAQ when trading on FTMO and MFF, if you guys have any input, just put your input in the chat so I don't have to go and figure it out myself. Yeah, I was thinking it's the same thing as US 30, Maddie. But I don't know. I don't really trade NASDAQ. But NASDAQ seems like the asset to trade during Asia session because it still moves pretty decently. Yeah, no, I'm gonna start off with like a one lot just to see. And I'll probably increase it as I go along. All right, guys. So if there's any other questions, feel free to put them in the chat. We've been on this mentoring session for about an hour and a half now. I'm free to stay on if you guys want me to, but I just don't have any questions here or anything to cover. But yeah, if there's anything you guys want me to cover, any strategies you want me to review, any examples, anything like that, feel free to drop your questions in the chat. Otherwise, we'll be wrapping this up and then coming back tomorrow for the next live session. I'll be looking for momentum scalp variations and momentum scalps, Maddie. So I've been looking over here at NASDAQ. So I was looking at it on so let's just go to like last week. I'll just look at a couple examples here. So we'll do like Thursday Asia session over here, right? So Thursday Asia session right here. I mean, the market's still kind of slow because it's still early in the session, but like later on, like say around like 6 o'clock, market starts to pick up, right? Turn on the gold bars. All right, so like looking at this over here, right here, Maddie. So this is like where it starts to pick up. It's still early right now, so I think like maybe in the next 30 minutes, price will start to pick up again. So like for example, right here, there is a momentum scalp entry right here. For this one, 25-25 is like way too close, right? I wouldn't use a 25-25 for this. I'd probably use a 50-50. And this is Asia session, so you want to cover the spread too. The spread's going to be wide during Asia. So you can see this eventually hits. It's a momentum scalp entry right there. This is a momentum scalp, and it's also a, not only is it a momentum scalp, but it is also a momentum scalp variation. So this right here is solid. I'm just looking for other opportunities so the reason why I'm looking at this, guys, is because I saw a couple articles from Bloomberg. They mentioned that a lot of hedge funds in Australia are hiring like a lot of new traders, like prop traders and stuff, to trade Asia session because they believe it's an untapped market for tech stocks. So like they're mainly recruiting traders to trade tech stocks. Of course, what's the tech stock that they trade? NASDAQ, because it has all the tech stocks in it. So that's why I'm looking at this, because if there's opportunity here to make money at night, then, it's not necessarily greed. I'm just looking to make more money because why not? So like, for example, right here, there's a momentum scalp right here. Trend meter is red, pivot scalp right there. I mean, below the pivots entry. And then again, right here. So we have a momentum scalp failure right here. I wouldn't have taken this trade because I don't like taking the momentum scalp failure. Although it does look like it does hit TP. So for this one right here, I'd probably use a 25-25 because it's a tighter move. Or I mean, it doesn't matter. You can use a 50-50. I think 50-50 might be the sweet spot because it's Asia session. Again, right here, this next sell signal, this is a Thursday Asia session. This sell signal right here is a momentum scalp, and it's also a momentum scalp variation. So same thing, 50-50. I mean, this one maybe could have been a 25-25. Let's see. No, it's too close. I use a 50-50. So using a 50-50 right here, you can see it takes some time, but eventually it does hit. So again, through here, price pushes around. Price pulls back below the pivots right here. So this would be a momentum scalp, or actually there's no more. The trend meter down below is green. So yeah, we have to wait for it to shift back. All right, momentum scalp failure right there. Wouldn't have taken the trade, but price comes back down like it did right here. So you guys see how this is super volatile. This is Asia session. It's actually moving very fast. So again, right here, price pulls up. We have a momentum scalp variation right there. Take that right there for 50-50. I think 50-50 would be the smallest that we would take here on these specific moves. Again, right here, price runs through full TP. Again, right here, momentum scalp entry. This candle is too big though. I probably would have skipped this one, even though it would have hit a full TP. Yeah, I mean, if you want to experiment with me, Maddie, I mean, feel free to experiment. I just use a small lot size or just trade on a demo account. I mean, if you want to just practice, I would just probably use a demo account. Or if you really want to use your real account, just use a small lot size. So you don't really have to worry about it. All right, this one right here would hit stop loss. But again, these are one-to-one risk reward entries. So these, let me go back to this right here. I just got to figure out the sweet spots like. Because if the sweet spot, if I have to use a 25-25 on these trades, I mean, I'm fine with it. Like this one over here, I think I might have used a 25-25. I don't think the 50-50 is always good because during Asia as well, it's not always going to be very fast. Sometimes the market will be slow. Because if I use a 25-25 here, this would have hit TP, full TP right there. But if I use a 50-50, it would hit stop loss. Same with this one over here. Momentum scalp. And then again, you have to keep in mind that there's also news that happens in Asia session, guys. So for me personally, let me see how the session's down here. So there's no sessions down here. But down right there wouldn't have played out. It's just a lot of testing that has to go on with this here. So I'll probably play around with it. I'll see if I find anything good. Maybe there's like a specific strategy that I should just follow regarding these trading sessions, but I mean, it looks like it could play out pretty well if we do have the proper criteria. Also have to check on the multiple time frames. Right here, I'm only looking on the 1. So I can't really say because I haven't looked here on the 5 and 10. But yeah, you could do that too, Maddie, 25-50. I mean, you know, it's still better than a 3-to-1. If you have a 2-to-1, it's still better than a 3-to-1. 1-to-1 best case scenario, if not anything higher. But for the most part, like looking over here at NASDAQ, so I'd probably be looking right now, looks like there's no overall trend. So in order for us to take trades, we need an overall trend. Over here on the 5 and 10, things are pretty neutral. So there's no room for us to make entry here, even if we wanted to. But yeah, I'll probably just play around with this and I'll see if I could find some entries here and maybe take a couple, play around with. Yeah, exactly. Maddie said this could be nice if we can get 2 or 3 wins, and for the live, we're good. Yeah, exactly. So that's what I'm looking for too, guys. Like I'm not looking to take every single entry that comes up. I'm looking for like maybe 1, 2, or 3 solid entries, right? I want to have some sort of confluence, maybe a V1, V2 variation, and then followed by an actual entry. And then from there, I'll take the trade and let it run. Just keep that in mind. Even though you guys are applying these strategies in other sessions, or if you guys are practicing in other times, just make sure that you're still looking for quality entries. Thanks, Andy. Yeah, no, so this right here is good for thinkorswim, but I was curious about like what the cost would be for FTMO, because the thing is they measure it differently. So I don't think you were around before when this happened to me, but I was trading gold, and I never trade gold, but I was trading gold, and then I ended up taking too big of a lot size, because like the lot size I thought was the same for FTMO and MFF. What happened was I made profit. I won the trade on FTMO, but the MFF side, it was like way different. So like I took the same lot size and I won the trade, but I blew the account on MFF. So it like blew all of my funded accounts last year. So that's why I need to figure out like what it's worth. I know like this helps for like trading on thinkorswim, but I needed to know what the worth that like the lot size worth is on MFF, because MFF is what screwed me last time. Their lot sizing was like way different compared to FTMO. And I was like so confused because I hit the trade and hit full TP. But what happened was I hit my daily drawdown, because like on MFF, it was like times 100. So I took like a 100 lot or a one lot on FTMO. And then that was equivalent to like 100 lots on MFF. So what happened was I took the trade. As soon as it went into drawdown, like for like 1 pip, I ended up just violating the entire account. So I don't want that to happen again. So I'm going to start low with like a 0.01, and then I'm going to increase it as I can figure out like what works. But yeah, no, thanks, Andy, for that list. That does work for like thinkorswim or other platforms that are similar to it. Just not for MFF, because MFF sets their own lot sizing, and same with FTMO. So, all right, guys, we've been on this mentoring session for over an hour and a half. If you guys have any other questions, feel free to put them in the chat. If you guys want to ask me questions personally, feel free to message me on Telegram at Kodi Kai Trades. Otherwise, I'm going to wrap this up for the day. If you guys have any questions, feel free to email me or message me on Telegram. Otherwise, I will see you guys back here tomorrow or the next live session as we continue on with this trading week. So, all right, guys, if you guys have any questions, reach out to me personally. If not, I will see you guys back here tomorrow for the next live session.